All right, hey everyone, Mark here. Welcome to another Greenbridge Investing Market Analysis. Thank you for joining me for another live stream. So in today's session, I want to talk about the FOMC, the meeting, the rate decision that came out about an hour and 20 minutes ago or whatever, and how that affects things. Okay. Now, keep in mind, I don't really care what they say in the press conference. What I care about is how it unfolds in the price action, because those are really where the important clues are going to be as far as all the markets that we watch. And so let's get into that. By the way, if you're new to Greenbridge Investing, make sure you check out our website at greenbridgeinvesting.com. We send out a trade of the week to our free members, which I sent out earlier today. So right. So make sure you check that out. Just sign up with your email. Yeah, this setup, by the way, we had some problems with the sound on the podcast yesterday, and nothing has changed physically with my microphone, really. I mean, I changed the volume level a little bit, but it's a setting in the software. I think I have it figured out for next time. Anyway, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, so before I get into Bitcoin, because we're going to take a look at all these, I'm going to look at the stock market. We're going to look at Bitcoin. We're going to look at, a couple of these altcoins, and then what's going on in the Forex world, because that's really what's going to be affected the most. By the way, the Bank of England also has their rate decision, I believe, tomorrow. And the Bank of Japan may be tonight if it hasn't come out by now. I don't remember the exact time that they were coming out, but that's all important for Forex. Okay, make sure you check out an economic calendar. So let's start with the NASDAQ, which is the NSXUSD. This is the CFD. All right, and what I'm interested in here is, how this market's going to close, right? We have about 40 minutes before this thing closes. Now look, so this is the effect that the FOMC had today. Again, I don't care what they say. The reason why I don't pay attention is because I don't want to have any opinions, okay? This right here is a bearish candle. So we close like that. Not only is it a bearish candle, but it's basically like an inside bar. Now, I've been telling people, be very careful with longs because of this situation that we saw, over the previous week or 2 weeks or whatever. And that momentum is still in play. By the way, I forgot to mention, hey, Joe, if you have a chart or a stock or a market you'd like to see, please put it in the channel now so that I can, once I get through with my analysis, I can take a look at what you guys have, okay? Because I really want this session to be useful for you. So right now, what we're establishing here is a lower high, okay? This is a lower high, not very good for longs. So that's why, again, I emphasize, and I wrote it in the email for those of you that have received the trade of the week. I emphasized in there that, we are facing the FOMC, and depending on the outcome, it's really going to set a tone for the next few days, or at least the coming week, for stocks. And if you have too many on and this thing sells off, you're going to feel the pain. So, I mean, there's no guarantee we're going to have a sell-off, but if this market if it liked whatever they said in the press conference, we shouldn't be closing on the low. We should be pushing the high. Okay, so, and not establishing a lower high. We shouldn't be doing that. So we'll see, in theory, what this should do is make a lower low over the next few days going into the next week. All right, so that's the NASDAQ. Now let's take a quick look at the S&P, just for comparison purposes. Look, we got a bearish pin bar. Okay, again, bearish. So, when like during the podcast yesterday, Henry brought up some fundamentals, and often when I speak to people about stuff, they always bring up fundamentals. Oh, well, this came out and the government did that and blah, blah, blah. It doesn't matter. All right. For short-term market timing, it doesn't matter. All we know is it developed a bearish pin bar. I don't care what Chairman Powell said. I don't care what they implied. I don't care what hints. I don't care about any of that. It means nothing. What matters is the people that matter who move markets, they are bearish, or the herd basically got caught at the top here, and now they're all, trying to sell at the same time. Either way, the market doesn't like it, and that's all I need to know. I don't need to know anything else. All right, so now what I want to do here before I start switching different markets, I want to pull up the stock that I sent out, which was FOUR. Okay, so this was the trade of the week that we sent out. And, so the buy stop, I just want to review it real quick. The buy stop was 46.85, as you can see here. Now, yesterday's high was what, 46.69. So this thing is in play. Today's high is 47.30. So, there is some momentum in this thing, and this trade is now active. We'll see where it goes. Now, the stock market is not acting supportive, but, considering that, this thing is closing decently. But if we take out this low, we take out today's low, that's not going to be good for this trade. But the reason why I'm pointing this out again, when I bring up fundamentals, is because I know nothing about this stock. Okay, I never heard of them. Obviously, I don't have a year's worth of data here, so I don't even know if the stock has been around a year. I know nothing about their fundamentals. This trade was based on a pattern. Okay, patterns repeat themselves. There was another one too, HIB, which is one we called the week before. And look at this thing, right? Hibbett Sports. This thing reached all three targets, I believe, right? Because target 3 was 40.25. What's today's high? 40.63. So I know nothing about this company. I've never even heard of them. Okay, I had never heard of Hibbett Sports. I guess they sell sports-related things. I have no idea what they do. Don't know anything about them, but there was a pattern. Okay, and I called it based on this pattern, and wow, what a move. Okay, and I was betting on the stock market attempting to recover and this thing outperforming, and that's what the outcome was here. They don't all work out like this, but the point is, I knew nothing about the stock. So whenever you get caught up in fundamentals, just remember this example. They don't help for short term, because if I was all wrapped up in fundamentals, I may not have thought this was a long. Okay, so anyway, it's sentiment that drives price in the short term, nothing else. So now let's move on to a couple other things here. Thanks for putting some stuff in the channel. By the way, if you like the analysis here, please send me a like. Also subscribe to the YouTube channel here if you like what I'm doing. So every time I do one of these, you get an email notification. And also when we do our podcast, you should get an email notification. All right, so let's get into the next thing here. Let's take a look at the Bitcoin and the altcoins. All right, so again, if you have a ticker you'd like to see, like I see some people have some in the channel, put them in the channel now, and I'll get to them. So Bitcoin, again, people bring up fundamental things that are going on in the space. Some kind of new coin is coming out, or they're staking this for that, whatever. I don't care. Okay. So all I'm concerned about with Bitcoin, and the reason why we haven't called it yet is because just like the stock market, this bearish structure may still be in play, but we don't have any evidence. There's no new selling activity here. All right, looks like at this moment, we're going to close strong. We still have a few hours. But what I'm most concerned about, because usually what a move like this will do, if it's going to establish a lower high, is lure a lot of longs, because they think, oh, okay, it's bullish. And whether this is related to the FOMC or not doesn't matter to me. What I'm most concerned about is this area here where I have this blue box, because that is an inflection point. Okay, and sure, DJ, that is an inflection point, and I do not want to be long going into that. I do not want to be long in that area, because that's not only do we have an inflection point there, but it's right back in that resistance zone, the 11,600 to 12,300. We tried taking an aggressive long back here, which didn't work out very well. So until this thing produces a better structure, I'm not looking to take any longs. Right? We're talking about swing trades here, not day trades. Now, what can change this whole thing, even with the current inflection points, like with this current roadmap in play, what will change the situation for me is if we pull back and we develop a higher low. That will change everything, because then that will be giving us a new structure to work with where we can measure risk very, very clearly. At that point, I'd be open to taking a long. Even with all this, with the inflection points and resistance up here, I'd be willing to give it a try. Why? Because I can measure my risk very clearly, and the risk should be much lower relative to the potential reward at that point. At this point, I can't measure risk very well, and anything can happen. It's very random here. This is very low probability. That's what I don't like about it, even though it looks like it's working its way higher. So that's Bitcoin. Now, in that situation, we're going to have many stocks that, altcoins that may be showing similar patterns, right? Let's take a look at Litecoin real quick. So, wow, talk about relative weakness. Litecoin didn't even try. Look at this. This is not a long, definitely not. This is a lower high established right here at this level. What is that? That looks like 50.84. Definitely not a good candidate for a long. This thing should be performing much better with Bitcoin at least attempting to go higher. If Bitcoin sells off, you better believe this thing is, since it's relatively weak, it is likely to break its supports. Okay, so just something to keep in mind there. If you're long Litecoin, might be a good time to maybe reduce some exposure. Even though you can argue with the pin bar and this and that, you do have a lower high. So the way I look at it is, hey, you can always get back in. You know, even if you reduce some of the position or whatever, you can always get back in if it fakes out the other way. But if it doesn't fake out and it sells off, you know, you'd be happy that you reduced your risk. So that's one. Let's take a look at a couple of other ones that have been on the radar in recent time, like Chainlink, right? Look, garbage, okay? Lower high, no good. And there's no reason to go long at the moment. Now, this could turn into a higher low. We do have this bullish structure, which is still, we can argue, is still in play. We do have a low that we can play with. So this thing still has potential, but there's just nothing there right now. And I'd feel much more comfortable if this thing would at least take out this lower high and give us, give us a signal that this bearish structure is no longer in play. Okay? We don't have that yet. So it's okay to take the early long if we get the reversal to give that a try, and bet on the broader structure. But at this moment, there's no reason. Okay? There's nothing there. There's no signal. So that's Chainlink. Another one real quick that's been on the radar in recent time is like NEO, right? We talked about this on the podcast yesterday, NEO. So this is why I'm always against buying at highs, all right? Some people tried to buy that breakout, I'm sure, and you get caught. So maybe it'll hold up, maybe it won't. Not a good place to be hoping, that's for sure. So for something like NEO, I'd rather see a pullback to near that range low. Again, if Bitcoin pulls back, I don't know if these things some of these follow more than others. This thing gets hammered with a Bitcoin pullback, it's likely to get hammered from these prices. Unless there's, you can have a piece of individual news that's just relative to this particular coin that can drive it. But I like to view that as random information. It can come out of nowhere. If you're not an insider and you don't know about it, by the time you know about it, all the insiders have made their move, right? And you're buying it at usually a bad price. So that's why I don't like to go by that. Okay, so let's take a look at one more, and then we're gonna jump into Forex real quick. So another one that's been on the radar is XTZ USD Tezos. Okay, look at this. The reason why I'm bringing this up is because just like a month ago, everyone was going crazy for Tezos. Everyone was wanting to be long. Everyone wanted to buy Tezos, right? Our first thing when we see this is we say herd mentality. Don't react, wait, okay? Now, if you had waited, look at this. Now you're facing a lower high, and this thing looks like it's poised to go lower. So, like I said, if Bitcoin is setting up for a sell signal, these things will probably start pushing first. They'll probably outperform on the short side. That's a sign of relative weakness. So it's a good thing if you didn't get in and you waited. It's a good thing because now you're not caught in all this mess. And all these people that have gotten caught are likely to bang it out at these lows where we'd be more interested in a long, especially if we start messing around this $2 area. Okay, and we get a failed low in that area. That's still a possibility. All right, so just a couple to keep in mind there. All right, so let me switch over to Forex real quick. And I want to start with the dollar franc because when you have an interest rate decision, mostly what's going to get affected the most dramatically are the Forex pairs, right? So we've been talking about long dollar. We've been talking about this for a while, all right? In fact, we tried taking the dollar Canadian long a few times over the previous month, got stopped out 3 times. And then we got this dollar franc. Now, we exited early. I sent out a message to exit this early, but look at this thing now, okay? Nice higher low coming from pin bar, and FOMC is out of the way. This is a long. So, at this point, we haven't sent it out. You're not going to get the best price on something like this if you buy it like now. But, this might be a good play to use a limit order below the market. Okay, you have this high over here, basically that, we'll say 91 even, because you want to look at the whole number. Today we're closing at what, 91.08. So you're still fooling around there, right? Is that 91.08? No, I'm sorry. Today's high is higher than that. Okay, no, it's basically around there. Okay, so in a situation, what's the low? 90.55. Okay, this thing doesn't have wide moves, but you may be able to pick this up around that 90.85 area, which we were originally long. So this is definitely one to play that game with, because these are noisy. But this is a nice setup for a continuation long. Let's take a look at the dollar Canadian real quick. Again, this is especially important because the FOMC is now out of the way. So here, you can even see one of the old trades that I had. I haven't erased the information on the dollar Canadian. We took the stop at 31.05, right? This thing went as low as 30.87, 130.87, which, 31.05, it's not a huge difference, okay? But what if this thing went to like 129? That would have not been good. Actually, no, you know what, the low, I'm sorry, the low is 129.94. So that's why it's better just to take the stop so you're not caught in something like that. What if you had banged it out at the bottom? That sucks, right? So instead, we got out at a much better price because we respected the stop. And now it's giving us a nice reversal structure. Andrew's been talking about this. And look, it refuses to sell off now. Look at these pin bars. Look at this little situation right there. So again, this thing could be noisy and perhaps we get a slightly better price, but both the dollar Canadian and the dollar franc are most likely longs going into the next week. All right, and we may send something out on that specifically. So just for those that trade Forex, put that on your radar. All right, so those are the ones I wanted to go through. And real quick, I just want to pop gold in there because gold is obviously going to be affected as well. Like what I talked about in the podcast yesterday, and I've been putting in the chat room, this environment is noisy in the Forex world. It's very noisy. 1 minute gold looks good, and then it looks bad. Then it looks good, then it looks bad, then it looks good. So this can really churn your account. That's why it's best to wait until things like the FOMC are out of the way before getting back in. Like if we had chased this thing and said, oh, gold's going higher, and we had bought into it, especially if we got all wrapped up with fundamentals, which are supportive for gold, we would have bought into this again. And we would most likely be sending out a message today saying, get out, okay? The low here is 1949. If it takes out that low, again, you're looking at a potential pullback, right, with a strengthening dollar. Is gold bearish? No. But why should you get caught up in that when you probably get a better buy signal at a much lower price, which with much better reward risk? So again, that's the point why waiting has a lot of value, and people don't realize that because they think something is moving, they think they're going to miss out. Meanwhile, it's just noise. So that happens in a lot of different markets. All right, so those are the ones I wanted to cover. Let me get into yours now. By the way, if you're new to Greenbridge Investing, please make sure to register for subscribe to the channel here, the YouTube channel. Also like the video if you like it. And check out greenbridgeinvesting.com. We do have a swing trade signal service by text and by email. It's swing trades. We have portfolio management ideas and a chat room where we're sharing insight and perspective each day. Okay, and also I'm really working hard to improve that podcast, everyone. I'm trying. Every time I think I have it fixed, it's not fixed. But I think I have it fixed this time. So hopefully next time my sound will sound more like this. Okay? So let's get into your symbols. All right. And again, thank you all for sharing them. So the first one I have here from Photo Guy, Len. Okay, Len. Is that a stock? Let me see. Is this the one you're talking about? By the way, if you want to see an altcoin, please make sure to put USD or USDT after the symbol so I know, and I don't spend a half hour on the wrong symbol. All right, I've done that. So first thing I'm looking at here are inflection points. And now for something like this, if you're short, if this is what you're looking at and you're looking at this as a short, you know, for whatever reason, you are fighting that, okay? That's one thing. Now, you do have a double top situation developing, but the problem is that structure is very small. Look what happened here, right? You had a double top here too. If you had shorted that, all right, it may have worked if you had took your money quickly, but if you had held on with some kind of opinion and said, okay, oh, it's a triple top. All right, I'm going to short some more. All right, and then you get hammered because it's not really a short. So you have to be careful of that. You know, obviously they're into, I believe they're into construction, if I have the right company, if I'm thinking of the right company, home building and all that stuff. If that's right, I don't even know. But the point is this, you're fighting a bullish trend. So yeah, you have the double top, but there are better candidates for shorts compared to this. Because if the stock market, while the stock market does not look very bullish after today, it doesn't guarantee we're going to get a lower low. Okay, right, okay, so I thought so. Yeah, doesn't guarantee we're going to get that lower low. Keep in mind, you know, we have the US election coming up, all right? And going up until that time, you better believe there's going to be a lot of attempts to keep the market strong. There's going to be a lot of talk. There's going to be a lot of whatever they have to do to keep that market green, right? So you're fighting that as well. Keep that in mind. And a stock that's relatively strong like this is more likely to break out and go higher in that type of situation. So 79.65, if it clears that, this is a long, all right? So just something to keep in mind. You'd measure your risk from like either this little mini low over here, 74.97, basically 75, or this low here, 71.80, so basically 71.50. I'd be looking for the breakout on this, okay? I wouldn't be bearish on that, not yet. In order to be bearish, the first thing it needs to do is take out this higher low. It needs to do that decisively. And then you can look for bearish structure after that. That's usually the safer way to play these on the short side. And by the way, if you're interested in shorting stocks, and if it's not a day trade, then I would suggest using options to do it, like, you know, buying puts or something. That's your safer bet in terms of risk, because if you get caught like shares short, or you short calls and this thing gaps on some news that comes out of nowhere, you get caught and it's never pleasant. Okay, at least with a put, your risk is completely figured out in advance. It's limited, and if you're wrong, you lose whatever you pay for the put. Okay, so if the thing gaps against you $10 or whatever on some dumb news, you know, your put just goes to worthless and that's it. Okay, that's the advantage to buying options. I'm not a big fan of buying options, but on certain occasions, it makes more sense. All right, so that's Len. Thanks for asking. Hey, Joe. So Joe's asking for Rolls-Royce. All right. Let's see. We've looked at that one before, Joe. So thanks for bringing that one up again. Let's take a look. RR. I think I got the right. Is that the right symbol? No, I don't think it's the right symbol. Hold on. I have to probably look in the, let me see, in stocks, and I'll find it here. Rolls-Royce. Oh, RR with a period. Okay, RR with a period. I guess that's the one. Is that the one? I see it's the only one here on this list. Let me see, RR. Oh, no, wait a minute. No, yeah, that's it. This one, let me just make sure I got the right one. I don't see any other Rolls-Royce here. All right, so I think that's the one. Now, all right, so I know we've someone brought this up before. I don't remember who, but we've looked at this. And so this is a stock. Talk about bearish structure, okay? So photo guy, you're asking about Len. Len looks nothing like this, right? Len is the complete opposite. So you have, first you have the sell-off like the rest of the market. Then you have a lower high. Then you have another lower high right here. And all that time, while it was trying to find support, trying to produce a failed low, it's failing, okay? So you do have a failed low area. This is definitely an area where you can see one, but right now at the moment, all you have is a series of lower highs and lower lows. This isn't good. So if you're long, you took out this low over here. What's that low? 206.7 or 206.70, and looks like you're closing below that, right? This is obviously closed if it's the European market, London Stock Exchange. So yeah, you have this little pin bar trying to develop, but for one, it's not a pin bar because the open to the close is too large. So that's not a pin bar. You have a tail. Okay, I'm sorry, I should say it's not a hammer. It's a pin bar because it has a tail. Let me just get my terminology right here. It's not a hammer because the open to the close is too large, but you do have a tail, a candlestick tail. But that's not enough. Like for one, you need to take out the high of that candle to do anything. So I would be careful. I wouldn't be a big fan of going long something like this because you're just missing the structure. All right, if anything, before looking for longs on something like this, if you're interested in a long, I would wait for at least that lower high to get taken out, at least. Okay. So that's how I would see that. Oh, Henry says Rolls-Royce is RCRYCEY. That may be the US version of it. The chart should be exactly the same. So I'm going to just type in that symbol. Let's just see RYC. Yeah, right, holding. See, the US. See that? So that's the US version. The chart should be exactly the same. Actually, it's much spottier. Look at that. That chart doesn't look that good. But it's probably, because it doesn't trade the same volume. This chart is much more complete. So it's the same idea. So like I said, I would be I'm not a fan of buying something like this. I wouldn't short it because it's, you're shorting into a low. So I just wouldn't do anything. If you're looking for a recovery, like I said, I'd wait until some resistances are broken first and then look for a pullback. Again, you are fighting something that is tough here, okay? This is a situation where if they can improve their fundamentals or something would probably make a difference, but technically, chart doesn't look good. All right, so that's Rolls-Royce. Thank you for that. Let's see what else we got here. So I know we had some questions about the cannabis sector. Let me see here. Oh, so Joe again asking about PayPal. Okay, PayPal for a long. Let's see. PYPL, PayPal. Okay, now here, all right, so right off the bat, you can see it, okay? Bullish stock. I mean, I've watched this stock because I wanted to see if we can call some trades in it, but never really gave a nice clear signal. But look at that structure, okay? So you have that going in your favor. You have an inflection point right there. So it's pulled back to it. So good location, much better than buying up here, which is a failed high, right? That's why I was warned against those. So you're at a better location. The question is, what about a long now? You're missing, there's no setup. So you have a location, which is like the first step, but you have a bearish close here. I mean, this thing's going to close in what, 15 minutes? So you have a potential double bottom, but buying it like right now is risky because what if this momentum continues, especially in the face of that S&P, which does not look like it's closing very strong. So if this thing breaks, you may see some further selling. So I would hold off on the long. Now, if tomorrow things change, right, and the market reverses for some other news, because again, there's going to be a lot of attempts to keep this market bullish, then I'd be looking at the high of this candle, 189.10. So you figure 189.25, something like that, would at least give you a better reason to buy if you're looking for a swing trade long. Again, whenever I talk about buying or selling these things, I'm always talking about swing trades, just to make sure people understand that we're on the same page. I'm not talking about day trades, and I'm not talking about investments. Like an investment or a position trade, that's something you can hold on to for 6 months, a year, or longer. A swing trade is only good for maybe a few days to a few weeks. Okay, so just to give you a sense of time horizon there, I want to make sure that's clear. So yeah, I would hold off on this for a swing trade until either we get like an inside bar or something, right, and you take out the high of it, or you get a nice large bullish reversal candle, and at that point you can measure your risk from this low, which is 180. All right, I mean it's 180.77, but you figure 180.5, 180, give it some room, something like that, and you do have some potential. But keep in mind, you need the stock market to go with you on this. Okay, you're going to have an inflection point right there. So if you're distributing your targets somewhere between, where you get long, from 1-to-1 reward risk, somewhere between there and this area, which is the low to mid 200s, like 204, 200, that area, that's probably your higher probability way out of this thing. Because at that point, you'll have a head and shoulders if it turns there. And I would imagine the NASDAQ and the S&P would be doing something similar. So just something to keep in mind, because this does follow the market. Okay. So thank you for bringing this one up. Let's see what else we got here. VLO and UAL. So let's start with VLO. Okay, DJ, VLO. So energy sector here, Valero. And, the energy sector has been a tough play recently because it's just hasn't been really producing a lot of technical patterns that have been very compelling, for one, and the fundamentals are a mess too. They're always very confusing. So that's why I don't get too mixed up with that, especially with these. So right now, you have the bull structure in play. You had this higher low attempt, but it established itself as a lower high. So that's a little problematic. Now, we can still argue, though, that this broader structure is in play because it really needs to clear these levels to really say, okay, this broader structure is out of play. It really needs to start taking out these levels. And it hasn't done that yet. So it's still worth a long, I think, based on what it's showing us here. But what I would wait for, though, instead of chasing into something like this, there are two ways you can go about it. The more conservative way would be wait until a test of that low, which is 45.5, that area. Okay, wait for something like that and then look for a reversal. With that, maybe you get a failed low situation. Maybe you get something like that with a bullish pin bar developing at the bottom of that, which would be ideal, probably the highest probability and lowest risk situation if you can wait for something like that. Now, this thing may not deliver that type of scenario. So the next thing you can wait for is maybe an inside bar. Okay, something like that, develop in there, or some kind of minor pullback, and then one more leg higher. Because the thing is, what you need to really establish a new structure of momentum, I don't want to call it trend, because when I refer to trend, I'm usually talking about the big picture. But you can have bullish momentum that can start moving way up. But what you need is a lower high develop, something like this, if this can establish itself as a lower high, and then it needs to be broken. Okay? Right now, you don't have that. Your most recent lower high is this. So right now, to meet the criteria that I just mentioned, it needs to take out this area here, which is a lot higher, 55.78. So you're more likely to get a mini lower high between here and there. So that would be another thing to wait for. Okay? It'll be a little less conservative because now you're going to be most likely taking a little bit more risk compared to if it retests this low and gives you a double bottom. All right, so those are the scenarios I'd be looking for. I'm not a big fan of chasing these things like right now, buying it right now and hoping it continues, because most likely maybe it'll run another 50 cents or something. Next thing you know, it's pulling back and you're taking pain for no reason. Okay, and then eventually it'll give another signal. So again, for a swing trade, that's what I'm looking at. If you really, really like it and you want to take a small, like a starter position, that's another idea. You can do 10 shares, 15 shares, 20 shares or something, and then you put on more if you get a real buy signal. If you don't get a real buy signal and it pulls back and starts pushing lows, you're in a smaller position. And if it keeps going without giving a signal, at least you get a piece of it too. So that's another thing to consider. Okay. All right. So that's that one. So let's take a look. Next one is UAL. Let's take a look. UAL. I'm not a big fan of these because of they're very news driven a lot of times. But again, you have a similar situation there. Obviously, it liked the FOMC outcome because interest rates have effect on these type of stocks. You're buying into this attempted breakout, so I would wait for a better price at least, or you could try buying that breakout after it breaks out. But I'm not a big fan of that because you can get caught in something like this and then it pulls back anyway. Right now, your range low is around there, just around 33. I'd give it the whole number, like around maybe 33 and a quarter, something like that. And you're probably better off looking for a buy signal there or slightly lower than trying to buy this breakout. It's range bound, pretty much. Although you can argue with the higher low here, that higher low isn't doing very well producing higher highs. It should make a higher high based on what it's doing right now, but I don't like this structure here. Okay, so just something to keep in mind. You can also measure your risk if you want to consider this a higher low, even though it's still in the range. You can do that at 35.5. You can look at that as a place to measure risk from. Okay, so I mean that's one way I'd look at that. Maybe this one would be a good one for options. I don't know how cheap the options are on something like this. They may be cheap, and at least your risk is limited if it does produce noise. So just something to keep in mind there. Okay, so thank you for bringing that one up. Let me see what else we have here. Okay, cannabis. So need a follow-up on cannabis options trades. All right, so let's start. So cannabis pretty much is CGC, Canopy Growth, right? They're like the leader in the sector there. And just like the stock we just looked at, I mean, look at this. This thing has been out of play for some time. You have this consolidation, it sucks, all right? But it keeps insisting on holding on to that $15 support. It just keeps doing it, okay? Had many attempts to break it, and it doesn't break. So for whatever reason, now it's producing a bearish pin bar today, which is not a good sign, but it's done that before, and it goes nowhere. So I would say that this is out of play. As far as options go, I mean, this is going to be your leader. If I were to buy options on these, long options, you probably do yourself a favor and buy a lot of time because they need time, at least 6 months on these things. I mean, look how long this thing's, since June, this thing has gone nowhere. Okay, or really you can go back even further to like May or April. This thing is still fooling around the same prices. So, or you have to take your money when it goes near that range high or something. This is much better for short options because you can capitalize on all this time being wasted. But just keep in mind, if there's a break, you have a choice. You can take delivery of the stock at wherever you shorted that put. Okay, I wouldn't short calls on this thing, short puts, because if any kind of news comes out, there's some kind of buyout or something, you're in trouble. So, shorting puts is one idea, but just keep in mind that if there's some kind of negative news and you get caught with that, either you close that position for a loss or you take delivery at the strike price and then get stuck in the stock for who knows how long. Okay, so yeah, those are some things you have to consider. But I mean, there is a higher low. I'm just waiting for news to come back. I'm waiting for Kramer to have the CEO of Canopy Growth on his show, and next thing you know, this thing's back at 30. So I'm waiting for all that hype, but so far no hype. But that's what's going to take. We need a catalyst to get this thing going. Like same with ACB. That's another one. Aurora Cannabis. This thing has just been since that hype news that we got a while back. We tried playing this, right? I had the right idea, but we missed the move because we got out after they had their 5-to-1 reverse split or whatever. And since then, this thing has just been going absolutely nowhere. It's just been going lower and lower and lower and lower. So what do we make of this? Well, let's look at the inflection points at least. You have this here. So it's at this old support, which is likely to be a support again, but I would not add to this. It's in a good location to add, but these stocks are just out of play. If you're going to add, it should be small, very small. That's why I wouldn't even bother until this thing starts changing its structure. It needs to stop making lower highs, and it needs to start making higher highs and higher lows. Okay, look at this, lower high, all over the place, lower highs. So that's why I refuse to add. I have some of that. I still have some ACB. I'm just not going to add to it until I see a change. And if this thing wants to go to zero, well, then we're going to go to zero. But I don't have a lot of shares, so it doesn't really stress me out or anything. So just something to keep in mind there. Right now, at this point, good location, but lousy stock, and it needs the leader to go somewhere probably before this thing starts going. Another one on the cannabis sector, Kronos. So again, like I said, if CGC doesn't go anywhere, I don't care how many pin bars we get. I don't care how many double bottoms we get. I don't care. It just doesn't really go anywhere, right? So we're at the range low, and we know that the range high is over here somewhere, which is around $7. Okay, so if you manage to pick some up now, keep in mind you're in a consolidation. The places to exit, if you pick some up, are in the middle of the range and near the high of the range, because this is not a trend. All right, so expecting like a big move is unreasonable. And again, unless some news comes out of nowhere, which is a lottery ticket. All right, so I would be very careful with these. So ways to manage risk, like I said, you can sell puts, right? If you don't understand what selling a put is, then don't do it. But selling a put is basically you're collecting a premium, you're selling at a strike price, you're shorting a put, which means you want the market to go higher. And if you're wrong and the market goes lower, you can take delivery if it goes through your strike price and keep your premium. So it's like getting paid to buy stock. The thing is, if it goes dramatically lower, now you're in this stock and you're going to take a loss anyway. And usually the premium is not enough to really compensate you for all that. So just something to keep in mind there. You can buy small shares, 5, 10, 15 shares at a time or something like that until it starts to improve and you don't go crazy with it. Or you can buy out of the money calls, all right, which are going to be very cheap, but you need to buy a lot of time. Like I said, 6 months or more. And then maybe you don't want to go too deep out of the money, perhaps the middle of the range. It's like, $6 calls, 6 months out. That has potential. If this thing pushes to $6 or $7, and you have 5 contracts, 10 contracts from like 10 or 15 cents, that's going to be a nice trade. So just a couple of ideas there. All right, so those are the main ones we look at, for cannabis. Tilray is another one. I know we talked about this previously because we were looking at the options. Look at this. Remember the options? DJ brought this one up, or someone brought up Tilray, and I was talking about the options, how they'd probably be super cheap. And like DJ brought up like 6 months out or something like that. April, what was it? The $10 or $8 calls were like 50 cents. I don't know what they are now. They may be a little higher because this thing's up a little bit today. But, if this thing starts to go, this thing used to be a mover, So, again, it's in the same situation, but I like that candle at least. Looks better than the other ones, okay? But these things are wild. Again, it could be on some news. I have no idea. So, good one for cheap options, all right? All right, so let's see what else we got here. So thanks for bringing up the cannabis sector. Earnings are coming. I would like to try and buy a small position, hoping they will pop. Okay. Well, so again, like Florin, with these cannabis stocks, their fundamentals are pretty bad. I mean, they haven't been that good. So I guess in order to have a good earnings report, they're going to have to report better than, or less bad than bad. It's that kind of thing. So it's a gamble. Just keep that in mind. But a lot of times when these things are hated and forgotten about, often there's opportunity there, right? Because when everyone's talking about them and they're on everyone's radar, that's usually when you want to be selling them. Okay, so there is some value into tracking them at these prices and maybe trying to work your way into a position. Just don't overload. That's all I'll say about that. Okay, I tend to spend a lot of time on things and talk a lot. So let me move on to the next thing here. All right, so I got ACB. All right, cool. So DJ, for someone who is new to Forex, what should my minimum account size? Okay, good question, DJ. New to Forex. Well, see, Forex gives you a lot of flexibility. I don't know what broker you're using, but your broker should at least let you trade micro lots, okay, which is it's usually 1,000 unit position. Or someone like Wanda, I don't know if they still do it, but they'll let you set your own size. So if you want to trade 1 unit of the euro against the dollar, you're not going to make any money on that. You're not going to lose any money either. But if you want to trade 1 unit, then you can do that. Okay. But most brokers, their minimum size is 1,000 units, which is a micro lot, which usually comes to like 10 cents a pip or something like that. Now, the reason why I bring those up is because that allows you to work with a smaller account. I I would say anywhere from $1,000 to $2,500 is a good place to start with Forex. Anything less, it's going to be tough, right? Because if you're trading micro lots and you're trading like 1 or 2 or 3 micro lots, keep in mind 10 micro lots is equal to 1 mini lot. Okay, a mini lot is $1 per pip. So like for the euro, for example, if you took a short trade on this move today, right, low 1839, and the thing is at 1788, that's what, 50 or 60 pips or something like that. On one mini lot, that would be $50 or $60 on one mini lot. Now, on one micro lot, you're looking at like what, $5 or $6 or something like that. They say, oh, that sucks, that's nothing. But if your account is small to begin with, you have to keep your risk as a percentage of your account. So if you're working with $2,500, and you're risking 1% or 2% in a trade, you have to do the math, and that's how much you're looking to make and lose, right? So a winning trade, if you're winning 2 or 3%, what is that? $30, $40 on a $2,500 account? Something like that, right? Like 2,500, so $25 is going to be 1%, right? So 2%, $50, 3%, $75. That's what you're looking at. It's very easy to get out of hand because you put on too much. It's very easy to put on a lot of size in these things because of the leverage that they give you, right? Minimum leverage, or I'm sorry, maximum leverage in the U.S. is 50 to 1. So it's very easy to put on, I can afford, 5 mini lots or 5 micro lots or whatever. The position's too big. Next thing you know, you lose 30% of your account. You'll never make money that way. Also, keep in mind, Forex is very difficult because you're always paying the spread. The dealer is always on the other side of your trade. So when you win, you're taking it out of their pocket. So it's in their best interest for you not to win. So it's just something to keep in mind there. Fills may be a little strange at times and stuff like that. That's why, it's usually, when we do Forex, we work with smaller accounts also because there's no reason to be big in Forex. Okay, but there's opportunities there and there's money to be made. So it doesn't hurt to be in it. Like look at the pound, right? GBP, USD. I mean, look at that move on the pound. That's unusual, but they had their interest. I guess they had their interest rate. No, that wasn't their. I think their interest rate comes out tomorrow. So the euro sold off, but the pound went up. So that's obviously. So let's look at the euro pound. That's probably going to be looking wild. Euro pound. Look at that. Right. That's one against the other there. Euro sold off while the pound went higher. That means this thing is going to be moved double. Okay. Nice location. Anyway, but there's no trade there. Anyway, so that's my answer on Forex. I know it was really long. How long have I been? I've been talking for a long time, haven't I? Let's see. Oh, not too bad. I thought it feels like I've been talking for 2 hours, but it hasn't been 2 hours. I hope it doesn't feel that way for you guys. Okay, so anyway, all right, great. So any other questions? That was a good question, DJ. We have another one here, CCJ. Okay, let me see. I just saw that one there, Henry. CCJ. I have a few more minutes, so let's do it. CCJ, Cameco Corp. I'm not familiar with them, but all right, let's take a look. So what do we have here? I'm looking at right now. The first thing I'm looking at are support and resistance levels. The first thing I want to see. These are basically what we call inflection points. So you're in a range, okay? You're fooling around in the middle of the range pretty much right now. Not a good place to put on a long or a short. I would be waiting for, since your general structure here is bullish and you're range bound, this consolidation, basically what you have in here is a triangle. If I drew trend lines, I could connect this high to this high, this low to this low, and you have a triangle. That type of triangle is often a trend continuation pattern. And the trend is clearly bullish. So at some point, this thing is likely to break higher. But again, you have to work with the S&P. In fact, someone asked in here about the S&P earlier, and I forgot to go over it again. So here, the SPX. Right, so this thing is probably going to be affected. Right, so I mean, look, when I take a look, let's just compare real quick since someone asked about it. Right, so this is the same as the SPX, right? This is the SPX USD. This is the CFD. I looked at this earlier, and this is not a good close. Like I said, that is now established a lower high. As long as that lower high is in place, this thing is likely to attempt to push the low. Okay, now there's no guarantee that it will push this low, but it's in a position to try. And this is now a time to be light on longs or not in longs, or like, I said, we had that swing trade that went off earlier today, the trade of the week, and now we have the S&P looking like this. So now we have to see how this thing behaves. But, this is why I always warn, don't get too crazy, don't get too heavy on longs. We'll see how this thing unfolds, going into next week. It's possible, though, just because we have a bearish candle doesn't guarantee we're going to go here. It's very possible that we make a little mini higher low or a double bottom. Why do I say that? Because over the next few, going into the election, like I said, the administration that's in power right now is going to do everything they can to keep this thing from making lower lows. So you're fighting, the administration. So just something to keep in mind there. All right, there's going to be a lot of talk. There's going to be a lot of whatever they have to do to keep this thing strong. So don't get overly aggressive either. All right. In fact, if we do double bottom, we're going to be looking for longs again. All right. So just something to keep in mind. So back to that stock that you brought up there, Henry. CC, what was it? CC. Oh, now I lost track of my thing here. Hold on. CCJ. Okay, here we go. Sorry, I'm a little, when you talk for an hour, you just kind of go into a daze. All right, so like I said, so if that S&P double bottoms, for example, and this thing is at its range low, that would be a much more compelling place to buy it, especially with the S&P likely to reverse and go higher. Right? So at this point, with the S&P looking kind of weak, I would hold off until you get a better price. All right, so just something to keep in mind there. Right. So remember, for long, when you're in a range and you want to go for longs, always look at the range lows first. Look for the range lows, and then look for the market to support you. Right. So the S&P needs to start to show some bullish price action, like I said. And if this thing's at its range low and you get a setup, like a pin bar or something to go long at that range low, I'd be much more compelled to look for a swing trade at that point. Not here, and not if it tries to break out on an S&P fake out. I don't know. This is a tough location because selling activity has established itself here. Tough spot. You're in the middle of that range, and it's tough to take trades here. Okay, so that's what I'd wait for. If it goes and breaks out and starts to run, well, what are you going to do? You're not going to catch them all. But I just don't like the position of the market, and I don't like the position of this stock relative to the market right now. So just something to keep in mind. An idea, again, if it breaks out, an idea one is you could perhaps try with smaller size. That's one way to compensate for the elevated risk around the location because it's very likely to fake out. All right, so that's CCJ. All right, guys, so thanks for bringing that up. All right, so I think, yeah, all right, this is about an hour now. Do I have any more questions? So obviously my sound sounds good, right? So hopefully for the next podcast, it sounds something like this, and it's the same microphone. It's right in my face, like I had on the video yesterday, and all that stuff. So I just want to remind you guys, I think it was a setting in the software that I use. So other than that, if you're new to Greenbridge, make sure, hi there, if you're new to Greenbridge, make sure you check out greenbridgeinvesting.com. Also, make sure you subscribe to this channel and send me a like. If you like my analysis here today, just let me know. It's always nice to hear. And we do have swing trade signals by text and by email. And if you sign up as a free member, you get the trade of the week, which I sent out earlier today. So, that's like a bonus trade. And they've been doing pretty well, the trades of the week, if you look back at them. So just that alone is worth signing up for free. Okay. I'm a Korean stock investor. Could you summarize today's remarks about the FOMC? Actually, so if you go back to the beginning of this video, I talk about the market position relative to the FOMC. It's a good question, but my point about FOMC is this. I don't pay attention to what they say. I look at what the market does after, and the market looks weak. Okay, so just going back to the SPX, the market looks like it does not like, here, I'm going to go back to the SPX here, the S&P 500. The market does not like the outcome of the FOMC meeting. So that's all I need to know. I don't need to know what they said. I don't need to know anything about what went on. I don't need to know any details about the meeting. All I know is I have a bearish pin bar. So that means that whoever matters and moves markets doesn't like it, okay? So that means, again, we're looking for shorts or some conservative short ideas. We're also looking for this thing to find stability for a possible double bottom if we don't get the lower low. So just a few things to keep in mind. This isn't the best level for a short, by the way. The best level would have been up here somewhere. And so far we're not getting that. Doesn't mean we can't fake out. We still can. So that's my take on the FOMC. It wasn't liked. Okay? So I hope that answers your question there. I think the stock market, yeah, that's what the chart says. The chart says the market didn't like it. Because if the market liked it, we would have had a nice, strong, bullish close. That's what we would have had. But we don't have that. Doesn't mean we won't get a reversal tomorrow or something, right? We could get a little mini higher low sometime between now and Friday, something over here, and everyone will forget about the FOMC. It happens all the time. So, but just at this moment, it wasn't liked, okay? So, well, no, I'm saying is we can get, there's a number of possibilities. We can get a higher low, all right? We can get a failed low or double bottom in that area. Or if this thing is going to establish this lower high and we get some more bearish news to really get that momentum going, we could get a lower low. I mean, that's possible. So we have to prepare for all those scenarios. And, so right now at this moment, obviously, we'd be looking for shorts to give it a try to see if we can get what we can get out of it. If we start to get stability and we get a reversal in this area, then obviously we're not going to want to be short anymore, and we're going to be looking for longs at that point. You have to constantly adjust to market information. We go into this with no opinions. We just go into it with what the market's telling us right now. We gauge our risk, we gauge our probabilities, and we go forward. Okay, and if the market reverses on us and we're wrong, we have to get out. Okay, that's pretty much it. We don't go in with any opinions, or we don't get stuck with any opinions. Like, we won't say something, oh, the FOMC was bad, so we're just going to be short the world and we should make money. We don't do that, because we know how noisy and how erratic and random markets can be. Okay, cool. Oh, nice. Well, thank you. Okay, so again, everything is price action. Everything is we gather clues from the charts. We're not looking at fundamental opinions. I'm not an economist. I'm not trying to be an economist. I'm not trying to act smart. All I'm trying to do is gauge the sentiment of the herd that's driving this price. That's all I'm trying to do. Okay? So you want me to make a short-term investment? I don't want you to do anything. That's up to you. I'm just telling you what we do, okay, and how we evaluate this information, and how we adjust to it. All right, so I think I got everyone's answers here. Oh, next stream. I usually try to do this every other day. I try. So what's today? Wednesday. So most likely Friday I'll do this again, but it depends. So, but I try to do this at least once or twice a week. All right, and I try to get these done like on Monday, Wednesdays, or Fridays. So just subscribe to the channel and you'll get the email notification when I do it again. I usually try to do it around 2 or 3 o'clock Eastern time. I don't have an exact time, it changes. Okay, and if you can't make it, don't worry. You can just watch the playback. Anyway, so thank you for joining me. It's always nice to see some new names. All right, everyone. So if I don't have any more questions, let's see, is got it 3320 buy, 3400 sell. Well, all right, here's the thing. I wouldn't put a 3320 buy. No, it's too early. Well, we can't say anything about buying. That's a location, sure. That's a location to look at, but we have nothing there yet, right? I don't know what kind of candle we're going to have there. That will determine if it's worth a risk or not. And he's saying 3400 sell? No. I mean, at this moment, if anything, if I was going to short this chart, I'd be selling 3383, so 3375-ish, something like that. I'd be looking for the short. break of this low and then looking for momentum to continue. That's what I'd be looking for as far as a short. That's what the structure says now. That's what the candle says now. Okay, all right, you guys. Okay, oh, I understand. It's crazy hours over there. No problem. You can always watch the replay. But thank you again for stopping by. Okay, and subscribing to the channel here. Anyway, you guys. All right, so I'm gonna wrap this up. Hey, DJ, no problem. I want to make these sessions valuable to you guys. I want you to learn from them, and I want you to come away with more confidence and more ideas on how to manage your own trades, whether it's swing trades, position trades, whatever. So I hope I'm delivering that. All right, you guys, so enjoy the rest of your day, the rest of your evening, wherever you are in the world. Again, thank you for listening and participating, and I will see you next time. Have a great day, and make sure you check out greenbridgeinvesting.com. See you next time.